Good morning, afternoon, and evening, traders from around the world. Welcome to January. I hope you all had a fantastic final week in the week, what was that, week 53, I think is what it went up to on 2020. Well, whatever. Glad 2020's gone. Now we're going into 2021, and I hope you're ready to rock and roll into week one. Nice and easy, right? Week one. First things first, we need to take a look at all the big things that are going on this week for our first week back. So looking at the news announcements coming up, Monday the 4th, we've got OPEC JMMC meetings. Those take place all day. On Wednesday the 6th at 2 p.m., we have FOMC meeting minutes. On Friday the 8th, we've got everything at 8:30, the average hourly earnings, non-farm employment change, and unemployment rates. So we've got some news to definitely keep this week going. Keep in mind, this is the first week back from a big holiday. So with the big holiday, a big break, it's typically a little bit more sluggish to kind of start things off. But it should be kind of interesting. This is definitely a different kind of market like we were talking about in the monthly brief. So now let's dig into the weekly side of things and see what we can figure out for week one, January 4th through the 8th. So first up to the list is going to be the NASDAQ, and the overall movement that we've got going on here is a nice ascending wedge working its way up from the bottom. A lot of the support is still a bit further down. I would love to see a dip into the 12,785s to even the 729s. We haven't opened yet. That's not going to happen until later this afternoon at 6 p.m. Eastern time when the NASDAQ opens back up for the week. So, I mean, realistically, we're not necessarily going to know where it's going to open up, but it's going to be very, very interesting if it's somewhere inside of this first zone. If it does want to open up a little bit below it, it wouldn't be a surprise to see a flush down to 677 to 622 and then a reversal back up. But one way or another, buyers are looking to buy the dip. The thing that stands out is the dip it might have already occurred. We've got this really, really nice sideways consolidation going on here. And after that sideways consolidation was put in, it attempted to break out and then immediately reverse back up. So that's a very good sign that the low has already happened. But if it does want to pull back a bit further, we've got some definitive zones of interest waiting. The S&P is next up and, of course, is very similar to the NASDAQ, but it has a lot more strength like we've been seeing on the S&P. And with this amount of bullishness, especially with this crazy giant bull bar to the upside, wow. Buyers are going to be looking to buy any dip they can. Buying way up here is not really an option. We're pushing into those all-time highs. There's nothing to really work with up there. So buyers are going to be looking for a dip, and the first logical dip is going to be backed by structural support, previous swing highs, swing lows, etc. 37.2475 down to 37.1275. And if it does want to dip a little bit lower, we've got the beginning where it's sort of separated away from this smaller trend, broke away and started creating this next one. Typically, if it's going to dip back, it's going to ricochet off the top of that earlier one and bounce back off. So we've got 3700s, which fits perfectly, big round number, and 3688.75. Those are the big zones of support for buyers to defend. If it starts breaking down through that, then we're probably going to start running into some issues. There's not a whole lot left to really prop the market up until it starts dipping down into the 3650s. So buyers are really going to be looking to try to hold on to the upper 3700s to maintain these highs and keep this train going. Next up on the list is going to be gold, and gold is setting up a very interesting situation here. We're propping the prices up pretty nicely around the 1870s, 1880s. Nice bullish channel working its way higher, and if we zoom out a little bit further, we can see this is still kind of fighting back against that drop off of the 1973s. But now that we're challenging this, it's a fairly obvious V bottom, even kind of looks like a possible head and shoulders. We've got a break of everything looking for continuation up, and that's sort of what we held off of. We've got the break of the head and shoulders, and we're looking for a continuation move back to the upside. So with a continuation move back to the upside, we have a follow-up wedge that's also coming through, and previous support which has already been proven. Realistically, at this point, I think buyers are just waiting for the breakout pullback. We've got that rising channel support, falling earlier wedge, then turn into support. Everything stacking up together where they come back around 1893-ish. That's going to be the big zone of interest to try to break this up. If the buyers can't If they can't maintain this up here and start breaking back to new highs, then they're likely going to start contesting these lows at 1860 and maybe even try to pressure down to these 1830s. So we're on a bit of a teeter-totter here, and it's not the most, it's not the prettiest looking thing in the world, but it does have a shot at trying to get that breakout move to the upside here. And then moving over to crude oil, which is an absolute train wreck. This thing looks nasty. We're coming into some pretty sideways price action, getting hung up around the 48s, and a pretty sturdy looking wedge. The big thing that stands out here is that this seems like the sellers tried to get a leg down. They had that new low, and it looks like they would have been trying to sell into this whole move. Failed. If it starts churning higher and breaking back above the 4880s, 4870s, into the 49s, really disproving them, then chances are those sellers are going to jump ship, and we're going to see a continuation back up to new highs, probably to challenge that $50 mark, or at least close. You know how the markets are. They like those Walmart blue light specials, $49.99. So looking for upside objectives on crude oil makes a lot of sense here, even with this falling resistance in the way, but it only makes sense if they can start cracking above this. If we see failure up here, or they crack higher and then immediately fail back down, that's a potential major sign of a trapped high, and this could come tumbling all the way back down to the 45s. So the big zone right now, it's got to break through these 48s into the 49s and prove that the shorts are stuck and squeeze them out to get this thing going. Over on the euro, we've got some pretty heavy bear bars coming in on the top. And the way that the euro's been cycling, zooming out a little bit more on this wider spectrum move, although it is, bullish tilt, it's moving its way up. Everything looks good in that sense. The one thing that's fairly obvious is that these pullbacks are pretty deep, right? The move up and the pullback is usually going either, 40-50%, or from the previous swing, it's pulling back 70%, right? There's a really, really nice dip. So what I'm looking for in this case, given the fact that they missed the highs and now we're starting to churn back aggressively lower, it would make a lot of sense to see a deeper pullback to 21765. 21560, but honestly, I would like to even see 21390, 21195, maybe even a trap low, right? A really big pullback, a nice deep pullback for buyers to come in on some better pricing. Typically, when you miss the highs of a channel, they're going to overcompensate and overshoot the lows of the channel. And with the divergent highs coming in with a triple divergent high, we've got some pretty good reason to believe that the sellers are going to have a chance at trying to pull back a bit further. And a deeper pullback makes a lot more sense right now. Oh man, and then over on Bitcoin, this thing is nuts. So pushing way up into these highs, the big pullback zone that a lot of buyers are waiting for is this washout that happened going right into the beginning of the year. That dipped down into the low 30,000s. Buyers picked it up pretty aggressively, considering it's about 5,000 higher now. So this movement to the upside is still showing some extreme bullishness and still some massive chances for squeezes to the upside to see this thing really start cranking. What I would really like to see, though, is I would like to see just something a little bit further back. I mean, where we are right now is such a massive target area that it's possible it can still go up. Like we were talking about in the monthly one, this could squeeze up to 50,000. But realistically, when it's at all-time highs, I just can't be a buyer up here. My probability drastically decreases, and it's just not worth it. So instead, I have to opt to try to be a buyer on pullbacks, which in the case for Bitcoin, either is massive or non-existent. Right, those are kind of the only two choices we've got right now. So what I would like to see is a quick little pullback. Maybe we can get a nice little dip down into the previous structure, the 28,000s. Really good washout, right? I want to see a big flush all the way back down, 29,000s, 28,000s. Kind of shake the cage a little bit. Then we'll be able to get buyers back in on more of a zone of interest. As it stands right now, this thing is in the atmosphere. This thing's in the stratosphere. There's nothing we can do up here. It's too expensive. So it's either just let it go and keep squeezing if you're already long, or it's waiting time. Got to sit on hands for better prices. Alrighty, well that's going to do it for this week, the first week of 2021. Woo! Welcome to January, right? Like we always say, stay safe out there, keep those stops in play, and let those winners run. I hope you enjoyed the video. Until the next one, we'll see y'all then. Thanks.